Why, yes, my good friends, it is that time once again for Happy Hour with the Lincoln. And on that note, let me give you the official cheers. This is where I will do my best to answer all of your stock market related questions, rant about specific stock market topics, or at least I'll try to stay on topic. I do have a tendency to ramble on, and I apologize for that. But it's all in the attempts for me to share my 2 decades of trading experience with you to help you become a more successful and well-rounded trader. So if you guys have questions out there that you think would benefit the trading community, feel free to send them over here to my email right here at support@thelincolnlist.com. For those that are looking for a more hands-on approach to their trading and you want to join a live trading community or surround yourself with professional traders, go ahead and click on this link right here. It'll take you to our live trading community. You can trade with us each day. Now, for some of you that are trading part-time and can't commit full-time to your trading, maybe you work another job. We've all had to do stuff like that. I have a solution for you as well. Take a look at this new room we have with StockTwits. I think it fits a large group of you out there. It helps you get acquainted with the Lincoln List, helps you gather some great trading ideas and stuff like that. And you don't need to be next to a computer. So I got something really interesting I'm going to talk to you because something that affects every single one of us. Got it all. And I'm really reaching out today to aspiring, struggling, non-consistent traders, because this is one of the biggest things that hinder you from going from the hobbyist amateur level into something that's more consistent, more profitable, more professional level. And that's don't get shook like a rook. Man, doesn't that, it sucks. It sucks to get shook like a rook. And you know the drill. You've done all of this donkey work. You've looked over all of these stock charts. You've drawn a bunch of freaking lines. You've seen these setups over and over again, maybe 50 times, 100 times in your early career. And you just know what's going to happen. I mean, you put in all this effort, you know, and you tell yourself, man, if this stock does this, I'm going to buy it. If it does this, I'm going to short it. And it does it. And then you execute it to what seems like perfection. But then there's this period of time where it's like, okay, well, it's not working out like I had anticipated in my mind. And we're going to talk about what I mean by anticipating in your mind. So it kind of messes with you there for a little bit. And then you start kind of second guessing yourself, wondering if, man, am I right about this one or am I wrong? And maybe you go dig in the social media and see what other people are saying about it. Maybe you come back and you double check and triple check and quadruple check your analysis, but you're still getting shaken around. Maybe the market's choppy, but it's kind of throwing you for a loop. You're getting a couple of green bars, a couple of red bars. It's just not quite acting. And you've been taught by the books that you have read, by the ancient wise people of the stock market that say, hey, if something's not working, you just get rid of it. So you do. You get rid of it, and then a couple of minutes later, the thing starts breaking out, or it starts breaking down, and you left this monstrous trade right there on the table. And it doesn't happen just once. It's like twice, 3, 4, 5 dozens. It's like a chronic problem. Now, that's something that never goes away with trading. But the difference between a professional and an amateur is an amateur experiences that in a chronic nature, whereas a professional will only do that from time to time. And that's what's going to make the difference, because we're going to talk about how this compounds with your trading results. So today what I'm going to do, which I shall need a drink for, excuse me, is I'm going to introduce to you something that's called the 3 by 10 rule. Now, this is something I came up with. Otherwise, it would be called something more fantastic than just 3 by 10. But this is something that I discovered many years ago when I was in the same situation, was struggling with these types of trades. And the first thing I started doing was I started journaling these trades, which I've done whiteboards and happy hours about journals, and I suggest if you're struggling that you do that. But one of the things I talked about with journaling trades was I was paying attention to my drawdowns. And then after I got out of a trade, I made this little column that said, did this trade work out for me in my favor, or did it not? Was it a good sell? Was it a good buy? Was it a good cover? Whatever the trade was. So basically what I was doing was I was marking from the time that I got rid of it, whether I took profit or not, was how much did I leave on the table? Did I get out too soon? Did I not let this trade manifest into what it could have been? And if so, how much was that? Now, at first, it didn't look like it was much of a big deal, but after a month of going through, and I went back through my journal, I started to notice that this was, like I said, a chronic problem, because more than half of the trades that I had sold for losses or covered for losses or took losses on, let's say, could have been either much smaller losses or some would have been really nice profits. So when I look back at my business and I was wondering why I was struggling, like we've said before, you have idea, execution, and management. This sort of falls into that management area. And I was realizing, look, I'm leaving a lot. It's not just 1 or 2 trades a month. It's dozens upon dozens. In fact, it's half or more of my business that I'm taking losses on, which means that 50% of the trades I either scratch, take small profits, or take losses on were wrong. I was wrong on the exit. I could have got better. So that means that's a significant problem. That's why you guys do a journal, but that's not what this topic is about. From there, what I did is I wanted to talk about time. Like, how much time does this take place? How many of these take place on a daily basis? What is it that I'm actually seeing? So over the course of a couple of months of back testing and going through my journal, here's what I uncovered. And this is my math, of course. And this is where I came up with the 3x10 rule, which is my cheap way of telling myself how to do something. You can figure it out on your own. So what this means is, based on what I was doing, that if there was 10 trades that I took, out of every 10 trades that I took, 3 of these trades would work out perfectly. Now, when I say perfectly, I mean how I drew it up in my mind. And that's another topic here about expectations and imagination and how we think things are supposed to work out. And I'll get back on that subject in just a minute. So out of that meant, when I say worked, that meant I got into the trade, suffered virtually no drawdown or was never red on it. And the thing just went right to my target or my estimated target like this, and so on. Now, this is where, while I'm on this topic, this is probably how it's kind of worked for some of you, if you think about it. If you talk about your big trade winners that you've had, day traders, the big ones that you've hit, most of the time it's been on a stock that did that very thing. You got into it, you never had any drawdowns, and then it shot right into your target. Now, the reason that trade works out, what I learned is because you weren't in the trade long enough to sabotage yourself, if that makes sense. Like, you got into it, you never dealt with the pressure about being red or upside down on it too much. And then it just shot right into the target real fast before you had an opportunity to talk yourself out of the trade, right? So this is exactly what this exercise we're doing about is self-sabotage. You never had the opportunity because it happened too quick. Therefore, it was a good trade. So what I'm saying is, when I looked at my records, about 3 out of every 10 trades that I took worked just like that. So that leaves us with 7 more trades. And you're probably going to fall along the same type of statistics, more or less. So that leaves like 7 more trades. Now, there's going to be a couple of losers in there, obviously. So out of this 10, 3 of these trades work out right away. It's these other 7 that are not going to be so easy. That doesn't mean that they're not going to work. It just means that they're not going to be that easy. What they're going to do is they're going to shake me around. It's going to bounce around. It's going to maybe move a little slower than I thought it was going to move. It's going to be choppy, whatever the situation is, sloppy, whatever you want to call it. But those other 7 are not going to be so cut and dry. Now, out of that, there's going to be a couple of losers, let's say 2, maybe even 3. Which is going to leave me 4 to 5 trades that are just laying there that are going to make or break the ratio of that 10. So out of those 5, I'm really going to have to work. I'm going to use that word maybe out of text, really have to work for this trade. I'm really going to have to put the effort into this trade. Now, why am I telling you this and what does it mean? First thing is it sets your expectations. See, my expectations as a rookie were terrible. I really believed, and I know we all do this, just admit it to yourself because you know that you do, and it's okay, is that our expectations are not right when it comes to trading. Number one, we come into trading, we think it's going to be easy. I've already talked about that. But in this exercise right here, we really think that we can pick a stock that's traded by human emotion and computers and all this other stuff that's going on, that we can pick the perfect bottom or we can pick the perfect top, and it's always going to work out for us and we're going to suffer no stress whatsoever. That's bullshit, right? I mean, Think about what we're asking. And I know I was there. I'm not pointing fingers, guys. I was there. I was one of those people that had those unrealistic expectations that said, it's always going to be that way. It wasn't until I looked at this ratio and what the most important thing about this ratio was, it was to let me know that I'm only going to experience that great satisfaction or those wonderful, amazing trades like that work instantly, that never have me in the red, that are just beautiful, like I drew them up in a textbook. It's only going to be like 30% of the time. The other 70%, I'm going to have to bust my ass for this trade. And when I say bust my ass, I don't mean let your ego get in the way, telling you when you're just like letting a loser go too far. But what you need to do with these trades first, let me help you with this because I think that's more important, is out of those, let's say 70% of the trades, some will turn to losers. But what you need to do is, it's really common that when something isn't working out, we start to second guess ourselves. We start to wonder, and it works on your psyche as in, well, maybe I made a mistake. Maybe I'm not as smart as I am. Oh, I hope this thing. And then you start kind of fixating on it. And then naturally by our DNA, we start fixating on a worst case scenario. Like, oh, this thing's going to crash. It's going to go to zero. It's going to dump. Then it's going to go red. And I'm going to lose all my money, blow up my account. And I'm going to be out there singing songs on a street corner for pennies. It just starts this like snowball effect the longer you have to wait. Now, one way around that is to not fixate on your trades, to think about right before you get into it, that 70% of the trades that you take is probably going to be something that's not going to be so clear cut. You're going to have moments of indecision. You're going to have moments of worry. You're going to have those times when those emotions get you. So you have to put those on hold. That's one of the other things why we say about being emotional about trading, is not allowing those to interfere with your decisions. So in a time like that, the first thing that you want to do is look at that ratio, the 3/10, and realize that 70% of the time, this is a sheer fact of being a stock market trader. This is the life I have chose to live, and this is what I must be prepared to live like. Otherwise, I can't be here. If I can't handle it, then I must go. So it kind of prepares you first of all. The next is to take a look at the analysis. This is why we always tell people in our room, and I've said many times on these public forums here as well, is you never look at your P&L. You don't freaking do that, because at some point that P&L will influence the decision that you have made on that stock. So what you're doing whenever you're trading that instrument is, when you have those moments of doubt, double check that analysis again. If you're a chart trader like I am, look at that chart and say, hey, even though it's sloppy, even though it's choppy, even though it's bouncing around, is the trade still good? Is my bearish thesis, is my bullish thesis still intact? Is the chart still holding the trend? Is it still holding the moving averages? If all the reasons that I got into this trade still exist, even though it's not really working, making me money, so to speak, I should stay in, because the trade is still valid. And this is a big problem that people have. Like I said, shook like a rook, because as I said, the disappointing thing about this, and if you think about this way, because I mentioned compounding, okay, use this as motivation as well. And this is what used to piss me off. I'm sure it does you. Is, like I said in the beginning, you put in all this work. You're the one that did it. You've studied, you've rehearsed, you scanned, you found this trade. It was your idea. You came up with this perfect spot, which you thought was perfect. Then you got in it. And then it turned out to be perfect, but you cut your throat. You like sabotaged yourself and cut your gains. You know, sometimes you'll get roughed up there a little bit, and then it turns green for you for a second. You're like, I just can't handle the stress no more. Guys, you got to be able to deal with that stress, because ultimately you're in this business to make money. And every trade is important. Every trade is unique to itself. And you got to work each and every one of those trades. That's the only way you can do it. So go back and check and see if that analysis is working. And think about that. If you turn around and you give up a trade that could have made you $2 profit per share, $3 profit per share, and you cut yourself short of that, that means you've got to go out and look for another stock that day and try to find a $3 move. You might not get that. And chances are you won't, because you already found the horse. You found the horse that you needed to bet on. You just got out of it. So in closing, guys, I know I kind of rambled. 3 out of 10. I want you to think that 70% of the time you get in a trade, it's not going to work out for you right away. You're going to have to wrestle with it. Now, wrestling with it doesn't mean ego, losing money, watching it fall on you and being ignorant like that. It just means there's going to be choppy markets. There's going to be periods of indecision. Stocks are going to consolidate. They're not just going to go straight up and straight down. And you're going to get pushed around a little bit. This is what makes a pro, is the ones that can get pushed around a little bit, the ones that can have their emotions tested, stay in the pocket, focus on the analysis, focus on why they got in there, blocking out the noise, and staying put, right? Stick and stay, earn your pay. Yeah, that was pretty good. So anyway, guys, I'm going to leave it there. As always, if you need help, you know where I'm at. Remember that when you get into trades, think of that 70% you're going to have to work. Only 30% are going to be that easy. You're going to have to put in your work to really make the big bucks. That's why you came here. Don't worry about being stressed. We all get stressed. That's what you're here for. And if you want to make big bucks, you're going to have to deal with this as your life. You will have to deal with the stress. You will have to deal with being patient and waiting on your money, but you're worth it. Remember that. So anyway, guys, again, thanks for watching this happy hour. Until the next time, cheers.